Hello again. We're going on now to look at step 4 of the incomplete records control account method. And that involves dealing with the adjustments, the year-end arrears and prepayments and those kind of things. I like to start with the loan. So if we have a look here, we'll see that Murphy borrowed 120,000 on the 1st of the 9th, 2019. Now, the first thing we must watch out for here is that that's the 1st of the 9th. So that means that Murphy will have owed the loan for 4 months, not 3. The 1st of the 9th, so the 9th, the 10th, the 11th and the 12th, 4 months. And 90,000 of that is going to premises and the other 30,000 will go to furniture. The interest charged on the loan is 5% per annum, so 5% of 120,000 would be 6,000, but as we said, it's for 4 months, so a third of that would be 2,000. We'll see that again in a moment. Now, as is typical with these questions, it's quite common that the loan isn't paid back by instalments as you would with a term loan, but is paid back in some lump sum in a future date. And what they're suggesting in this question is that the full €120,000 will be paid back in 2027, so that the 120,000 will remain as a long-term liability until then, or until the year before that. The reference to transferring €1,250 every month into an investment fund involves the bank account and isn't directly involved in this loan calculation here. So let's go down and have a look at the treatment of the loan. We've borrowed 120,000 at 5%, so 6,000 would be a full year's interest. As we borrowed it on the 1st of the 9th, it's only 4 months, so a third of a year. So the charge for interest will be €2,000. And the question tells us that 20% of the interest payable, that means 20% of the interest for the year, which is 1/5 of 2,400, is charged to the owner as drawings. And the remaining 80%, the 1,600, is charged to the business, and that will go in as a profit and loss expense. As we said, we're not making any installments, so that's 0. So the amount due to service the loan is 2,000, and the question tells us that we paid 1,500. So there remains 500 due but unpaid, and that will go in our balance sheet as a current liability. Now, if we have a look at the insurance here, we'll see a fairly typical adjustment in these questions, whereby at the start of the year, we have so many months of a particular expense prepaid. In this case, it says on the 1st of January in the business that Murphy bought, there were 3 months premises insurance prepaid, 1,200. And then if we check the bank payments, we find that the annual premises insurance premium of 3,800 was paid during the year. So if we start with 3 months prepaid, and then during the year we pay another 12 months, it follows that we end the year with 3 months prepaid as well. So if 3,800 is 12 months, a quarter of that must be the amount prepaid for next year. That'll be 950 of the 3,800. So let's have a look at the insurance account down here in our step 4 adjustments. I've used a T account here, which you don't have to if you don't want. I've started off by showing that we have an asset for the prepayment of 1,200, and then we paid 3,800 for a full year's insurance. The credit entry for that is in the bank account, and I've debited the insurance account. So last year we paid 1,200. That goes to this year. 3,800 we paid this year. 950 of which belongs to next year. The 950 there will be brought down as an asset, as a debit balance. So that means by deduction we must charge our profit and loss with €4,050 for this year's insurance. If you don't like the T account, you can try plus and minus, and we can say that we started the year with €1,200 worth of insurance that had been paid last year that belongs to this year. This year we paid 3,800, 950 euro of which belongs to next year, so 4,050 euro is the charge for insurance in this year's profit and loss account. Also, at the start of the question, we were told that there were wages due of 1,800 euro. During the year, we paid in our cash account here, we paid general expenses 45,800. So that must include us paying for the 1,800 euro owed since last year for wages due. So if we look at that in our salaries and general expenses account down here in step 4, we have general expenses with the debit figure here being the amount spent, and we credit our cash account with that, and we debit general expenses. That's the 1,800 that was owed from last year. So it follows that the charge for this year is 44,000. Again, we spent 45,800 on general expenses. That includes the payment of 1,800 for the wages we owed from last year. So that must mean that 44,000 is the charge for general expenses this year. And lastly then, we'll have a look at light and heat. Our question tells us that 25% of the light and heat used should be charged to the owner for drawings. It's attributable to the private section of the premises. One of the payments here in our bank account is for light and heat, 6,800. And down at the end of the question, at the assets and liabilities at the end of the year, we're told that there's an unpaid electricity bill for 380. Electricity due 380. So we'll incorporate that information now again in step 4 for a light and heat account. So if you have a look in here at that light and heat account, during the year we paid 6,800 for light and heat. We credit our bank account and we debit light and heat. But we still owe another 380 euro here for unpaid electricity. Therefore, we must have used 7,180 worth of light and heat, and the question tells us that the owner is to be charged 25% of that as drawings. So 25% of 7,180 is 1,795, leaving the remaining 75% to be charged to the business, the profit and loss account 5385. Or if you prefer plus and minus rather than using the T account, you can say that during the year we spent 6,800 on light and heat, and at the end of the year we still owe 380 euro. Therefore we must have used 7,180 euro of light and heat during the year, 25% of which is going to be charged to the owner's drawing, 1,795, and the remaining 75% being charged to the business in the profit and loss account 5385. And that ends our step 4 of control account methods for incomplete records.